I'm joined by Mr. Atul Lal, Managing Director, and Mr. Sunil Vachani, Chairman and Promoter of Dixon Technologies. So your company is going public in the first week of September. Mr. Vachani, if you can share a little bit about the business. What is the business like? What is it about?
Yeah, so I think I would like to talk about the journey so far, how it all started, where we are in the journey right now, and where we plan to be in the next few years. So it all started in 1993 with a single rented premises factory, a single customer, which was Gold Star and now known as LG Electronics, and a single product, which was 14 inches CRT color televisions. And in a short span of just around 24 years, the company has emerged as the largest complete solutions provider in the field of consumer electronics, lighting, home appliances, and mobile phones. So when we talk about complete solutions, we refer to right from designing of the product to sourcing of the key components, assembly, manufacturing, with deep backward integration, logistics, and even reverse logistics. And I think the company in the last few years has grown exponentially. The revenues have grown at almost 33% CAGR. The EBITDA has grown at almost 44% CAGR. And I think if one were to analyze some of the reasons for this phenomenal growth, one, of course, we have a great team led by Atul and all the CEOs under him. Two, I think we have invested into creating capacities, which are huge as compared to both the domestic as well as global standards. If you look at some of the capacities, we have a capacity of almost 126 million bulbs per annum, almost 10 million mobile phones per annum, 1.2 million TVs, LED TVs per annum. So it's a huge scale that we've created, and that gives us a huge cost advantage. We've also invested into backward integration. So for LED TVs, we manufacture our own panels, which is called the LCM. We manufacture our own cabinets. In LED lighting, we do our own, wound components and plastic parts. And similarly, in washing machines, all the plastic parts are done in-house. So this backward integration has helped us tremendously, and I think we have some of the top brands as our customer list. In our customer list as marquee customers. Some of them are Philips, Panasonic, Gioni for mobile phones. So I think these are some of the reasons the company has grown phenomenally in the last few years.
Mr. Lal, since you would be anchoring the ship, would you also tell us, how do you plan to use the proceeds that come from the fresh issue with this IPO?
So there are two components. We have a primary raise of 60 crores, which is going to be invested in new capacity for LED televisions in our Tirupati plant. Also, investment would be made for backward integration of lighting, as Mr. Vachani shared. Further, we are going in for a debt reduction of approximately 22 crores. And then there is investment into upgradation of IT infrastructure, plus some general corporate purpose. And the balance is in OFS.
Who would be the selling shareholders in the offer for sale? And I do understand MOSL is also offloading 19% of their stake in the company.
Yes, as Atul mentioned, there is an offer for sale and there is a primary raise. In the offer for sale, Motilal Oswal Private Equity, they invested in a company a few years back, and they are divesting almost 19%. And there is a small dilution by the promoters as well as some of the employees.
What has been the reasons for MOSL's exit from the business?
Well, I think it was from the first fund that they invested in a company, and that fund is coming to a close. But I think they've been an invaluable partner for us, and I think it's been a great journey with them. So I think it was fantastic to have them on board.
Mr. Lal, the company is quoting a price to earnings ratio of 38.5, and although we do not have any competitors in the business, because yours is a multi-product business with consumer electronics, lighting and mobile phones, so how do you justify these valuations?
You see, we have huge conviction in our business, and that conviction is being reflected in our growth numbers of last 3 years. So we have faith, and this valuation has been decided along with the bankers. So that's what I was about to say. So there is growth, there is high ROCE of 36%. We have created walls around our business, and India is on a growth curve in all the categories that we are in, and we happen to be in a lead position. So we have huge conviction in what we are stating.
So also, you forayed into the mobile business last year, and when we look at the financials, we see an increase in trade receivables by nearly 400%. And although the ROC, like you say, is high, the return on net worth has dropped by nearly a quarter percentage point. So, how do you kind of justify that, and what has been the reasons for such a bloating up of trade receivables?
Yeah. So
Please, please, please carry on.
Go ahead. Go ahead. Go ahead.
You see, just to, because this is a number thing, there is a corresponding increase in the creditor side. So there's no increase in the net assets, right? And that's what matters.
So if I can just add to that, as I mentioned to you, that our net cash conversion cycle, which is basically the debtors and stocks minus the creditors, is only 9 days. And to us, I think that is the number to watch out for. And in that, in terms of comparison, I think we're extremely efficient if one is working on 9 days net working capital cycle.
The second question you raised on the dip in the return on, you see, that's only because of the change of the denominator. Actual return on net worth is increased. It's primarily because of the conversion of Motilal's CCDs into equity. So the equity base went up. That's all about it. Actual number has improved.
If one had to look at the revenues, they kind of doubled from 2016 to 17. Would you attribute that to mobile business? And in a market where, Geo phone has entered and there are competitors still struggling in a market where, there is so much of competition, how did the company manage to get such great revenues?
So let me tell you about the market first of all. If you look at the mobile phone market, right, the estimated market size is roughly around 350 million pieces per year, out of which 40% is the smartphones and 60% is the feature phone category. And as per the reports, industry reports that you must have read, India is the fastest growing market for smartphones in the world, and it could be one of the largest market for smartphones by 2022. And Dixon is right now only in the smartphone category. Right, and we manufacture only smartphones. So the launch that you talked about, that is of a feature phone. So that could be disruptive for the feature phone market, but not for the smartphone market. That's a totally different price segment in the segment that we operate in.
What I'm also asking is, did it essentially have any impact on the sales for you? And because there are primarily two clients, like you had mentioned, Panasonic and Xiaomi, for the mobile phone segment, how did we target such sales from these two clients?
Mobiles in 16-17 was a new vertical. So almost 800 crores odd has come from mobile alone. So whenever you take up a new vertical, there's bound to be a quantum jump in your revenues, particularly when you are in a vertical which is a very large pool. And as Mr. Vachani shared, that mobile is a very large pool in the electronic